Guys, how are we doing? I'm Ryan Mack. Welcome back to Trading Guys. We are going to fly through this again today. We're going to write down on our notebooks currency strengths. So grab your notebook, grab your pen, currency strengths. Then you're going to write strong, weak, and neutral. It's been a really weird week because markets are they're back and forward, bouncing between this risk on, risk off, blah blah blah. There was the initial kind of thing where Trump was like, "Yep, we've made a deal with China," and I got caught out with that as well. It's not a deal. They have simply agreed to pause. They've kind of shook hands, say, "Okay, let's pause this tariff stuff for now, for the next 90 days until we make a deal." So until there's a deal being made, there's nothing, dead set in the markets. They could all turn back to shit again tomorrow. And I think yesterday Trump already tweeted something and fucked them up again. I think it was Europe. He imposed 50% tariffs on Europe, and it was just like, here we go again. Okay, so I also got caught up with that. In GU, I had a losing trade on GBP USD. I had it as a sell. Now, everything came in fine, as in terms of what I look for, apart from the candles were above the 200 EMA. Normally, if they're above the 200 EMA, I'm looking for buys. If they're below the 200 EMA, I'm looking for sales. But that's not always the case, right? It's just in general. Hence why I took it. It was in a very good area of value to buy from. It was not, to sell from. It was not in a good area of value to buy from, okay? But it was in a good area of value to sell from and so on. It met the criteria of my trades and so on and so forth. And actually, the fundamentals still met. However, pound fundamentals did come in strong. And what kind of shafted the US, even though US numbers came in pretty strong, I believe, let me just see, core retail sales, minus, okay, so that's not good, strong. Strong, yeah. Overall came in, oh, that's Canada, sorry, what am I talking about? My bad. Where is the USD? Is it Thursday? Yeah, very strong numbers, fantastic numbers, So even though they came in great, unemployment came in great, GBP still kept pushing on forward, and that's more to do with the uncertainty in the markets, okay? Basically, when there's uncertainty, I feel like, how do you know when it's risk on or risk off, right? Well, if everyone's kind of happy about what's happening in the world, there's always going to be little problems, right? But if there's certainty in the markets, then markets are going to be risk on, and markets are risk on like 98% of the time, right? But right now, because there's no actual deals between the EU, the US, China, the US, there's little talks about, okay, let's hold off, let's make friends, okay, let's kiss and hug. But there's no deals done as of yet, and that's a very big thing, and that caught me out this week. It's very important when you're in trading to be able to have that accountability and be like, well, why did I have a losing trade? Actually, candles were above the 200 DMA. Actually, I entered it as it was moving. Normally, if you watch my older videos, I always say, no retest, no entry. On this occasion, I did not wait for a retest. When I look back at it, I'm like, oh, Ryan, I didn't actually follow one of my rules. It was by accident, I didn't break my rules on purpose. However, I'm like, fucking hell. One of my little sayings I always say to myself is, no retest, no entry. And if I had waited for the retest, rejection, and then enter, that market would not have rejected. It would have kept going, and I wouldn't have entered that trade. Okay. Now, it doesn't really matter. You're always going to have losing trades. Trading is not about perfection. It's just about having an edge and knowing what you're doing when it comes to fundamentals, when it comes to technical analysis, and basically having no fear of losing trades. Don't have any fear about taking a trade when your edge comes in. And my overall loss was 0.21%, right? 0.21%, not even a full 1/4%, okay? So it's fuck all. And that's why I always like to trade that way. Many people focus on how much they're going to make, right? Like, oh, I need to trade 2%, I need to trade 4% because I want to make more money. I never focus on that. I always focus on how much money am I going to lose if this trade goes against me. Now, if you're trading at 2, 3, 4% and it goes against you, like mine did there, and it hits your stop loss, you're going to be like, fuck, and it's emotionally going to affect you, because that's quite a lot. It's not a huge amount, but it is quite a lot, right? However, if you're like me and you have a losing trade and you've lost 0.21%, you're like, yeah, who gives a shit? You don't even notice it. You can go to your bed the next day. And more importantly, when it comes time for your next trade to come around, you can enter it because you're not worried. You're not like, oh shit. But if you're trading your 3-4%, even more, and you're not too confident yet in your strategy, and you have a losing trade, what happens is, not even if you get over that losing trade, like, okay, right, time to get back in. When it comes time to enter your next trade again, you're going to be flapping. You're going to have a lot of hesitation. You're going to be like, oh fuck, should I enter now? Should I wait for this? Should I wait for that? And the next minute, before you know it, it's going to end up being one of those trades where the markets just fucking fly and you don't get a chance to get in, and it's like, oh, I've missed it, you know. And it's just this horrible roller coaster of fucking punishment that you're going to go through, right? So that's why I like to trade small. Okay. Now here we go, guys. As you know, I write every week. Currency strengths: strong, weak, neutral. The reason why we do this, we go through the macro data. We see which economies are strong, which economies are weak, which economies are neutral. Once we find which ones are neutral, we just score them out. We don't care. When we find which ones are strong and weak, that is how we decide which pairs we are going to be trading that week. You know, how many times have you, let me just see, looked at this, right? Look at all these pairs, and you thought, how the fuck do I know I'm supposed to be trading here? There's millions. Well, this is how you do it. You find a strong economy, you find a weak economy, and from here, you maybe get 3 or 4 currency pairs to look at. That's how you choose your trade, alright? It's dead fucking simple once you can master this. It takes about 4 to 6 weeks to get used to this, guys, right? It's not, and that's if you actually put the fucking effort in and you try and learn it, you know? If you're just half-arsing it and you're not studying, then of course it's going to take you longer, right? But you need to have full accountability when trading, okay? Now, let's get cracking. Also, in trading, remember, I'm a swing trader, okay? So you must remember that if I'm saying an economy is strong or an economy is weak or neutral, I'm thinking about the bigger picture, because I've got, what was it last month? What was it the month before? What is it expected to be next month? I've got all this in my head, right? And it just all fits with me. I know how to place it all in my mind, and you can do it as well. By the way, I've not got a fucking super brain. I left school when I was 15. You guys can do it as well. It's just time on this, and then your brain starts to, you know, put all these pieces of the jigsaw puzzle together. All right, you can do it in about 4 to 6 weeks, I promise you. So when I'm saying here, this economy is strong, this economy is weak, blah blah blah, you have to remember that this week, that particular currency / economy might show signs of strength. So you're like, well, you said that's weak and it's strong, it's flying. Yeah, that's the micro, okay? And obviously a market's always moving patterns up and down, right? So you've got the micro, the intraday movements, and then you've got the macro. What is it going to do from now until September, you know, from now until July, whatever. So I base it on the macro, because I'm the type of person, pardon me, I want to enter a trade, and I want to let that fucking thing run for the next 20 weeks and not have to care about it. You know, let it run and run and run, okay? Now, if you get an economy which is good for months on end, and all of a sudden it has a really bad week, that doesn't just make it go from strong to weak. You know, it just means it's had a bad fucking week. You need to see you need to see consistency of weak numbers, this is coming down, that's consistently coming down over a period of time. Then you're like, okay, this economy is now, you know, weak or neutral, and so on, okay? Or vice versa. This economy was previously weak, and now it's becoming neutral / becoming strong, okay? So you have to remember that. Let's just move on. So what I do is I look at each pair individually, except from Oz, China, and New Zealand. Okay. Now, of course, we don't trade the Chinese currency, which is called Chinese Yuan Renminbi. However, it has a major effect on the likes of Aussie dollar and New Zealand, and that's why we look at it. Okay. Excuse me. So. Previously, I had Oz as strong, but let's have a look. That's this week. Yes, okay. So right away, I've got NZD is weak. I already know NZD is weak, right? I don't even need to bloody look at it. I just know it's weak. We will look at it, but, you know, we know it's weak. These are good numbers, right? But, I mean, they're not enough to then put it in a strong position, okay? Now you might see NZD going up, this week or tomorrow, or sorry, Monday or this week, whatever. It's because we're still we're bouncing in and out of this risk on, risk off scenario, and NZD is a risk off currency. Okay, so when markets are risk off and basically there's uncertainty in the markets, people will then remove their money from the USD and they'll put it into safe haven currencies. Okay, CHF, NZD, Japanese yen, gold, silver, blah blah blah. Okay. Excuse me. So, yeah, we're getting some decent numbers here. PPI. So, I mean, when these are high, that means PPI is like when companies. Let's say you have a company that builds this, right? This arm for my microphone, right? PPI is the cost increase of the raw material, right? That's what it is. The cost price of the raw material before the factory then makes this. Now, if this goes up, which this has massively went up, which is probably to do with trade wars and tariffs and blah blah blah, what do you think is going to happen? Do you think these factories are going to pass this on to the shops, which then sell the product on to consumers, and they're going to take the hit on their profit? Or do you think they're going to pass up this massive increase over to CPI, the Consumer Price Index, i.e., your Tesco's, your Asda's, your B&Q, and make the consumer, you and I, take the hit and pay much higher costs? Of course, the company is not going to take the hit on that. That means CPI is going to be more expensive. So when you go to buy stuff in New Zealand, after this, your groceries, your microphones, your cameras, your headsets, they're all going to be more expensive because it's costing more money to bring them in and produce them, right? So they're not going to take the hit on their profits. They're going to pass that expense onto consumers, so then things are going to get a lot more expensive. So then what you can anticipate from seeing high PPI numbers is that potentially once we get CPI numbers coming in, they're not here now. Okay, they're not here yet. Okay, maybe next week. Once we get CPI numbers coming in, you can probably anticipate they're going to be higher. Okay, so you'll be looking to see higher CPI numbers next time, all right? Fundamentals is just common sense, guys. Honestly, it is common bloody sense once you get used to it. Sorry, I'm just filling up my tea. 2 seconds. My yerba mate. Okay, so let's just try and fly through this. So anything below 50 is bearish, anything above 50 is bullish, okay? So bearish, bullish, bullish, bearish, bearish. Now, don't be fooled that that's green. It's came in green because it's higher than the forecast. They thought it was going to be much worse at 5.7. It's came in better than the forecast, so that's a kind of good thing in a way. But look, it was previously 7.7 and it's dropped massively to 6.1, and that's year on year, so that's not fucking good, okay? That's bad. So do not be fooled because that colour is green, okay? It doesn't just mean, oh, green must mean good. No, it's bad, all right? Look at the previous, okay? Retail sales year on year have dropped, bearish. Fixed asset investment dropped, bearish. Unemployment has dropped, so that's bullish. I don't care about this. Australia has cut their central bank rates to 3.85% as anticipated, as forecast. So you probably see it didn't really have an effect on the market because it's already been priced in a month ago, NZD trade balance, that's very good. So that means they are at a surplus. So when it comes to trade balance, you either have a surplus, which means you are in the green, or you have a deficit, which means you are in the red, you're in minus, okay? Now, they are clearly in a surplus, and it's more than doubled, so that's fantastic. It could be to do with the trade balance, they've had to pay more money, so it could be that. But basically all it means is they're exporting more stuff than they are buying. I.e., if you're exporting, that means you're selling more stuff, which means you're making more money, right? If you're exporting less, but you're importing more, it means you're buying more shit and you're not making as much money. You're spending money, right? So then you end up in a deficit, okay? So the fact that they are in a trade balance surplus means that they're exporting more stuff than they're importing. It puts them in a positive, which is actually good for the country, okay? It's not enough to make New Zealand, oh, fucking hell, it's a strong economy. It's really not a strong economy right now, I hate to say. Credit card spending year on year has dropped. That's not good. If more people are spending less on their credit cards. It means the economy is getting less stimulated, right? And the banks are getting less interest and blah, blah, blah. So that's not good. You want to see credit card spending up to be a positive, okay? Oz manufacturing PMI, manufacturing PMI is 51.7. It's the exact same as previous, which is good. Anything above 50 is bullish. Anything below 50 is bearish. Now, when we look at flash services here, flash services have dropped from 51.0 to 50.5. However, that does not mean bearish, guys. It means things have gotten slightly worse, yes, and we could potentially anticipate, dropping to 49 or something in the next one. But it's still bullish because it's above 50. It just means things have kind of slowed down a little bit, okay? So bear that in mind. Don't just think just because it's less that it means bearish. It's still bullish if it's above 50, okay? Retail sales quarter on quarter is 0.8. That's dropped. It's only green because it's higher than forecast, okay, but it has dropped, so that's not good. Core retail sales has dropped. Not good, yeah. Yeah, so overall, I don't think things are looking very good for Oz right now. Yes, there's a couple of, these are, solid numbers, but I still don't think it's very good for Oz right now. Let me have a look at the last week, just for a quick swatch. Wage increase, employment change, that's good. Unemployment steady. Things aren't looking too good for Oz in the coming future with everything that's going on. They've cut rates again. Cutting rates isn't necessarily a bad thing. They're trying to get inflation down, right? And then you start the cycle of putting it back up again, okay? The bull market. When inflation starts going back up, it's a bull market. But I would actually say we can put Oz in neutral. So now you don't change things from week to week, like I said, and you don't, but it does warrant it being neutral. We've got quite a lot of data here. Quite a lot. It was neutral before. I changed it. It was neutral for a while. I changed it last week to strong because we get good numbers again, but with the rate cuts and so on and everything else coming in with China, it's really bad. That's going to have a huge knock-on effect on Australia. You won't see, so China's numbers here, you won't see that affect Australia here. You'll see these numbers affect Australia in the next batch that comes out, right? They're always kind of 30 days behind each other. So, yeah, you can anticipate from that Oz is going to be in a hot locker, and I'm going to put it in neutral, okay? Let's see what we've got for next week. We've got CPI on, pardon me, CPI on Wednesday, construction work done, official work rate, okay, New Zealand looking to drop rates by 25 base points. Non-manufacturing PMI, okay. Not a lot of news next week. We've got some for NZD. We've got CPI year on year for Oz. That's quite a big one that we want to see that, okay? But yeah, not much apart from that. So, moving on. And it gets much faster now that we're only doing one currency pair, okay? We'll just fly through it. I try and keep it as short as I possibly can, but at the same time, I need to explain this to you so you learn, So it is what it is. And the thing is, seeing each of these videos, I could literally talk for 4 fucking hours, Even if this video lasts 50 minutes, I'm trying to keep it short, but I could really talk for 4 hours explaining it all to you. Okay. This week, Canada. Yeah, Canada's weak anyway, right? It's always bloody weak. Bearish. Median CPI year on year. Bullish. Bullish, they're good numbers. Bullish, that's good. Bullish, that's good, month on month. Bearish, 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 bullish, bullish. So we've got, well, that's what's called mixed data. Where it's kind of 50-50, it's mixed data. Let's have a look at the graph here, right? And you want to see, is it consistently going up or consistently coming down? Well, we'll get a consistent rise here, so it's looking well. We could potentially be moving up to this zone here, right? Let's see what we've got in the next one. Just have a quick look at the graph. Steadily increasing. So that's quite nice, actually. Common CPI. Steadily it's risen to the previous. So we could be seeing a rise here, What happens when you get the fall, you get the rise. So let's see. We do, however, when it comes to Canada, we really have to take into consideration, what was I going to say? We have to take, oil, okay? So what I will do is I am going to shift CAD across to neutral for now because it is showing some decent numbers. Let's just have a look. And it's year on year. Again, that's why. Good, bad, good, bad, good, bad. Okay. So yeah, it's mixed data. Okay, you could, if you wanted to keep it at week, you could, but I mean these are quite good numbers, and they're year on year. So that's showing good, consistent growth, and better than anticipated. It's not. It's definitely not strong by any means, and you have to remember Canada gets most of its strength from oil. Okay, oil's in pretty much shit state. Let's have a quick look at oil actually. Let's have a quick look. Okay, I still see oil as bearish, but we're doing it for around $50 a barrel. I do see it's going to come up. I'd be looking to sell from here if it goes back up, retest here like I've got. I'd be looking to sell from here. Not really the best. I would like to see it come up and maybe retest this zone here. This isn't the best, but the previous support, once broken, becomes the new resistance, right? Now, if this does not hold, this resistance does not hold, and it does manage to break through and penetrate, for the buy, you're looking for this right here. You're looking, there we go, for it to break up, retest here, come back, retest this zone, enter. This is your entry for the buy, and away you go. Okay? That's what you're looking for. No retest, no entry. I simply bloody forgot that last week with the GU. But that's us. Okay, so I'm going to put it in neutral. Let's see what we've got next week. GDP month on month. Okay, so not much. So Canada, neutral. I don't even know why we look at this. Yeah, it's shit. I'm going to stop looking at CHF because it's just fucking pointless. CHF for me, as I always say, is just simply neutral all the time because you don't trade CHF based on this data. Look, it's always bullshit data. You don't trade CHF based on this, okay? CHF gets traded between market sentiments changing, which is risk on or risk off, okay? So it's always neutral for me, but if markets go to risk off, that means at that point, you know in your mind that the Swiss franc is going to become strong and whichever other currency pair, especially if it's USD, it's going to become weak, okay? And if it becomes risk on, then it's going to reverse, all right? So that's it. I'm going to stop looking at it because it's just a complete waste of time. Euro is absolutely dog shit. Let's have a look. So it's sticky, bearish, slightly better than before, but still bearish, and it's month on month. Bullish. Consumer confidence, it's still minus 15. Better than before, but still minus 15, so it's shit. 10-year bond, slightly up. Bearish, 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 bullish, bearish, bullish, right? So it's still shit for me. The Eurozone is not strong for me at all. In my personal opinion, but we do have to check CPI and stuff that we see. CPI is sticky and quite strong, and these are year on year, right? So there is some, it's fighting back, it's trying to hold in there, okay? So it's not all out, but yeah, manufacturing service and stuff is just really, really poor. Core CPI, final CPI, they're very sticky. So yeah, it's a little bit meh. Let's see what we've got next week. I'm keeping it a week for now. When you're seeing it going up just now against other pairs, it's just based on risk sentiment, and it's also market sentiment, and it's also based on things like trade deals here, trade deals there, blah blah blah, optimism here, optimism there. It's altering the micro, okay? What I'm anticipating here is the macro, what's going to happen over this next long period of time, okay? The overall strength. Next week, French CPI month on month, don't really care. Private payouts, consumer spending, we care about that, but it's only month on month. Prelim GDP, German unemployment change, yeah, we want to see that. When it comes to Europe, we only really care about Germany and France. We don't really care about France and Spain and Italy. If we see them come in, we look at them, of course, right, to remain informed, but we don't really care about them because they don't have big enough economies to actually sway the markets in terms of the euro. There's not that much CPI. There's not massive news next week, okay? So euro remains weak for me, in my opinion. Okay, pound. Bullish, 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 bullish. Really fucking good numbers from pound. Bullish, sorry, that's not bullish, that's bearish, sorry. Bearish, bullish, bearish, bearish, bullish. Okay, so things are looking quite decent for the pound. I previously had pound in weak. I'm going to slide that across to neutral for now. I wouldn't say it's quite strong. It is showing micro strength. So macro, I'd put it kind of neutral because we need to see some good solid numbers from that, okay? We are seeing, but let's see what these new trade deals and stuff bring, okay? It's definitely not, it's not weak just now, but it's definitely not strong. Strong numbers, yes, but no, it's not enough to make it strong overall. Yeah, there's not much news next week, okay? So let's just crack on. Japan is in shit state. Japan released last week. I'm just putting it in week right away. Don't even need to fucking look at it. We will, but you don't need to look at it. Japan announced last week that they are in shit state, very close to what happened with Greece. Remember when Greece was fucked, and they were stopping people from like lifting money from their bank accounts and all that. You could only lift like 60 euros a day and all that kind of stuff. That's the kind of position Japan is almost in right now, guys. Japan is fucked. So I would not be buying it. Yes, you might look up here and be like, well, how if it's so fucked, Ryan? Why is GU, melting? Well, it's not melting. It's just coming back down because of the risk-off sentiment and people moving large amounts of money from the US into safe haven currencies, i.e. Japanese yen, Swiss franc, and NZD. But it is not a real move, okay? The Japanese economy is fucked. You would never be investing in the Japanese economy in a million years right now, i.e. if you're selling GJ, which means you're buying the Japanese yen, you'd never do that in a million fucking years, right? Unless you're absolutely mental. Bearish, bearish, bullish, bearish, bullish. Okay, it's not enough to move anything. We've got some decent news this week. We've got CPI, SPPI, consumer confidence, Tokyo CPI year on year. Yep, we want to see that. Unemployment rate. Yep. Retail sales. Yep. So we've got some big news next week coming up, right? Or this week, I should say, coming up. But it's still weak. The USD. What fucked us as well is that the USD got downgraded. They get fucking downgraded, so that meant people withdrew their money again. It was like, for fuck's sake. So that kind of shafted us on the GU trade as well. Not to worry, but I'm just explaining. Sorry, that's next week. Let's see what we've got this week. We had pretty decent numbers for the US, I'm sure. Come on, where's the numbers? Surely it's not just that. Bearish. Crude oil inventories. Unemployment claims. Bullish, 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 bearish. Yeah, we don't care about that. And bullish. Yeah, we got really good numbers from US. So what made it, show weakness is just simply down to market sentiment of the uncertainty. So risk off, all right, that's it. Money being moved, money flowing out of the US to safe havens. That's all. That's why gold is also rising. Okay. Next week we've got core durable goods orders, HPI, S&P, prelim GDP, unemployment claims, yes, prelim GDP, yep, core PCE, Chicago PMI, personal spending, yeah. So yeah, we've got some decent news. Excuse me, I'm still putting the USD as strong, I'm still putting the USD as strong. Yes, there is the uncertainty. If you wanted to move it to neutral, because it's like, nah, I'm unsure, then you could. Let's just have a look at what they've got over here. This is obviously the micro, right? This is Prime Market Terminal. Not an essential piece of kit. However, I always say it's a great piece of kit. Look, there we go. Look, USD. I've got it as strong. They've got it as in macro. They've got it as strong in the micro. Euro neutral. I've got Euro as weak. GBP neutral. I've got GBP as neutral. Yep. Canada bearish. I've got it as neutral. AUD bulls, I've got it as neutral, yeah. But like I said, the micro, you know, is neutral because it's showing good numbers. However, because I'm thinking about the macro, we've just seen that China's been absolutely fucking pummeled this year with this month with the year-on-year data. So I'm anticipating the macro. What's going to happen now? Next month's data for Oz is going to be bearish because they're going to then feel the effect in 30 days' time, right? So you need to think ahead with the macro. It's not about predicting the future. It's just trying to, you know, put the pieces together and be like, okay, this is what's going to happen, you know. NZD neutral. I've got it as weak, but they've got it as neutral based on, you know, fucking decent numbers and CPI, blah blah blah. I don't. Japanese yen bullish now. This is bullish because of risk off. Okay, it's not bullish because of you know, a huge amount of, you know, what they've got going on. They've got the manufacturing production, the machinery manufacturing or something that we just saw. That's got good numbers, okay? CHF neutral, okay? So we are pretty similar. Bearing in mind, this is the micro and I deal with the macro, okay? But we are pretty similar. Yeah, that is it, guys. So let's just have a recap. What I've got, my personal opinion, strong is USD. You could argue that pound is showing strength just now, but not in the, you know, the macro type way. You need to see more data before I move it to strong. Okay, so strong USD, weak NZD, Euro, Japanese Yen, neutral AUD, CAD, CHF, and GBP. Okay, one more time: strong USD, weak NZD, Euro, Japanese Yen, neutral AUD, CAD, CHF, and British Pound. Okay, guys. Thank you for watching. Normally, what I do is I mark up these areas. You're like, how do these areas always hit? I don't have a secret ball, guys. It's areas of value. Look, bang. If you watch my video from how, you know, fucking whenever I drew this on, this market was up here, and I already drew this on. It came back down, hit it, and went. You know, it happens all the freaking time. They just hit. Time and time and time again. Look, it's not a crystal ball. It's just how the markets respond. Same again. Look, boom, boom. Look, bang, bang. Right? Don't have a crystal ball. It's just there are reasons why it moves from these areas, and it's because of areas of value. Okay. That's it, guys. I need to shoot because I need to go get my hair cut. I've got loads of stuff to do today and tomorrow. I'm Ryan Mack. Thanks for watching the trading, guys. If you enjoy this, don't forget, look, we have a full Discord. Wait, I'll just show you. Look at this bad boy. In fact, I'll just make it smaller. I'll put it in the center for you. There we go. Look, we have a full Discord. If you look at trade, look, we give scalp trading, day trades, swing trades. We have full-blown education up here. Look, we have a full list of education videos. On top of that, we actually give you the trades that we take. Whenever I do my trading, I give you live. I do it all live, so you can watch me on here trading my managed accounts. Trading chat, trade results. Here's the results from our members. Look, right, here we go. These are our guys. Some of them are taking their own trades now. Some of them are simply copying our trades. Here we go. Look. All right, if you want to, we charge £147 a month for this, and look, the guys are smashing it. You know, you easily make that back once you copy our methods. If you join our broker, we have a broker deal where the broker will give you, the broker will pay a certain amount towards your education subscription if you use them. They will also give you a 100% deposit bonus. It is an A book broker, not a B book broker. B book brokers could fuck you over. A book brokers can't because they only make money on commissions. They do not fill the orders by themselves, okay? So that's very important to know. We only use A book brokers licensed. However, the one time when you join us, they will give all of our members a 100% deposit bonus. So if you deposit $2,000, they will top that up to $4,000 for you, right? Only one time for our clients. Spreads are great. When you deposit, or even if you do a withdrawal, if you're in the UK, the money will be in your bank within an hour. You know, that's how quickly these guys do withdrawals. If you're outside the UK, of course, international banking, it can take 1 to 3 days, okay? But it's not like IC markets where you put in a withdrawal request and you're waiting for 7 days just for it to be approved. You know, we don't do any of that bullshit. Your money will be in your bank within an hour once you do a withdrawal, okay? What else have we got here? Yeah, we've got tons, look at this. All right, so if you want to come and join us, drop me a line or jump across to our Instagram, which is The Trading Guys, okay? Drop us a DM and I will send you out the link. You can come and join us, all right? So the markets are crazy right now, guys, okay? They are absolutely shit. Don't be in any rush to trade them. If you're a scalp trader, of course, crack on, but just be very careful. Don't over risk, don't over trade, don't get fucking emotional. Place your trades using logic. Do not get emotional, okay? One of the ways to stop being emotional when you're trading is don't risk too much money. Just risk 0.25%, 0.5%, 1%, maximum 2%. That's it, okay? Don't do anything fucking stupid, okay? Thanks for watching. I hope you learnt a lot. See you soon.